Hello everyone and welcome back to the channel. Today, we're diving deep into a biotechnology giant, Vertex Pharmaceuticals, ticker symbol VRTX. You might know them as the undisputed leader in cystic fibrosis treatments, but the real story is what's happening beyond their flagship franchise. Is Vertex on the verge of its next big growth spurt? Or are there some hidden risks investors should be aware of? Stick around as we unpack it all in this comprehensive analysis. Let's start with a quick snapshot. In 2025, Vertex is on track for a solid year, projecting around $12 billion in revenue. The engine driving this is, of course, their cystic fibrosis portfolio. Led by the blockbuster drug 𝗩𝗏𝗧𝗏, this franchise is a cash-generating machine, and it's what's funding the company's ambitious expansion into new territories. However, not everything is going according to plan. Vertex has recently launched some major new products. The first is 𝗩𝗓𝗏𝗧𝗏, a non-opioid pain therapy. Its initial sales have been a bit sluggish, coming in around $20 million in the last quarter, which was below what many had hoped for. The other is 𝗩𝗏𝗧𝗏, a groundbreaking gene therapy. Despite its potential, it's facing some logistical hurdles, leading to slower patient uptake and a surprising dip in revenue. As a result, some analysts have trimmed their short-term price targets, suggesting that the path to explosive growth might take a little longer than expected. So, with the new products off to a slow start, where is all the excitement coming from? It's all about the kidneys. That's right, Wall Street's eyes are now firmly fixed on Vertex's late-stage kidney disease portfolio. This is where the company's next multi-billion-dollar opportunity lies. Programs like Povetacicept for IgA nephropathy and Inaxaplin for another form of kidney disease are seen as the key catalysts that could completely reshape Vertex's future over the next 5 years. Let's break down the company's strategic playbook. First, the cystic fibrosis business remains the bedrock. It's the reliable cash cow that provides the financial muscle for Vertex to take calculated risks in other areas. The company is actively working to smooth out the launches of its newer products. For 𝗩𝗓𝗏𝗧𝗏, the challenge is getting insurance companies on board. As more payers add it to their approved lists, we should see sales pick up. For 𝗩𝗏𝗧𝗏𝗏, the gene therapy, it's more of an execution game, streamlining manufacturing, logistics, and coordinating with treatment centers to get more patients scheduled. These are complex but solvable problems. But again, the main event is the kidney disease pipeline. We're waiting on some major news here. A key interim data readout for Povetacicept is expected in 2026. Positive results could allow Vertex to seek accelerated approval from regulators. If these kidney drugs make it to market, we're talking about a massive new revenue stream that could dwarf the initial contributions from their pain and gene therapy products. These upcoming clinical milestones are the inflection points that could send the stock soaring or leave it treading water. Of course, no investment is without risk, and Vertex has its share. The biggest one is revenue concentration. Right now, the company is overwhelmingly dependent on its cystic fibrosis drugs. If that market ever slows down, the pressure is on for the new products to perform. And as we've seen, the launches of 𝗩𝗓𝗏𝗧𝗏 and 𝗩𝗏𝗧𝗏𝗏 have been slower than anticipated, raising some questions about commercial execution. Then there's the classic biotech risk, clinical and regulatory hurdles. The kidney disease pipeline is incredibly promising, but it's not a guaranteed success. Clinical trials can fail, and regulators can ask for more data. Even if the drugs are approved, Vertex will still have to convince doctors to prescribe them and insurance companies to pay for them. And finally, we have to consider the valuation. The stock isn't exactly cheap, trading around for $109 per share as of late. This price suggests that the market is already betting on some degree of pipeline success, which means if there are any disappointments, the downside could be significant. So, what is Vertex stock actually worth? Analysts have a pretty wide range, generally placing its intrinsic value somewhere between $445 and $520. That suggests some moderate upside from current levels. If we run a simple discounted cash flow model, a common valuation method, the numbers point to a fair value range of about $400 to $470 per share. This tells us the current market price is pretty fair, factoring in the stable CF business and some modest success from the new launches. But it also means there isn't a huge margin of safety if things go wrong. Let's look at how the next 5 years could play out under a few different scenarios. In a conservative case, if the kidney pipeline disappoints and CF growth slows, earnings might only grow by 5 to 8% a year. In that world, the stock would likely stay flat or even drift lower. In our base case, which assumes some partial pipeline success and steady CF performance, earnings could grow 10 to 12% annually. This would support the current stock price with a bit of modest appreciation. But here's the exciting part, the aggressive case. If the kidney drugs are approved and become blockbusters, we could see earnings per share growth of 15 to 20% or more each year. This would be a game changer, potentially re-rating the stock and pushing it well above $500 per share. This really highlights how sensitive the stock is to the clinical and commercial execution over the next 18 to 24 months. So to wrap it all up, what's our final assessment of Vertex Pharmaceuticals? The company has some undeniable strengths. Its market-leading cystic fibrosis business provides a fortress-like balance sheet and a steady stream of cash to fund research and development, and its late-stage kidney disease assets have true blockbuster potential. On the other side of the coin, we have the weaknesses. There's clear uncertainty around the commercial launches of its new products, and the company's future growth is heavily dependent on just a few key pipeline milestones. The current valuation is optimistic, which limits the immediate upside and amplifies the risk of any setbacks. In conclusion, Vertex is a fundamentally strong company at a pivotal moment. The valuation seems fair for its current state, but the real prize is tied to the outcome of its kidney disease trials. For investors, this period might be one of consolidation and watchful waiting. The company's story for the next 5 years will not be written by its cystic fibrosis franchise, but by its ability to successfully launch the next wave of innovative medicines. If the upcoming clinical data is positive, we could see a significant re-rating of the stock. But until then, it's a story of patience and potential. Thank you so much for watching this deep dive on Vertex. If you found this analysis helpful, please hit that like button and consider subscribing for more content like this. Let me know your thoughts on Vertex in the comments below. See you in the next video.